last piece, tidbit right there. All right, there we go, guys. Welcome to State of the Real Estate Market. This is yours truly, Chris Brown, bringing you another episode of State of the Real Estate Market with yours truly. We're going to dive into this. It is the month of May. So it's May 2025. This update, we are in month 5, almost month 6. So we're almost halfway through the year, guys. So much that's to talk about. Uh, People have been asking questions. What's going on? What's new in the market? What should I be doing? What should I be investing in? Well, guys, we are definitely going to bring that information to you guys so that you guys can know what is going on in state of the real estate right now. So what I typically do for those who are new to the channel, what I typically do is I do an update of the market. This is a site that we not only talk about uh, building wealth. We talk about the market. We also talk about hot entrepreneur topics, things that a lot of people are talking about in today's world. So stay tuned as we dive into this and give you guys the latest and greatest. Make sure we are ready to go. There we are, rock and roll. I like it. I like it. I like it. So what we do, guys, is we have a conversation typically once a month about the real estate market, giving you guys the update. As you guys can see, this is for the market update of May 2025. So much is going on right now. If you haven't already done so, be sure to like, subscribe to the YouTube channel. This is something that we're trying to grow here in 2025, making progress as we get more views, more information out there to everybody. All we're trying to do is continuously bring value, and that's what we want this subscription to be about, bringing you value about the real estate market. And like I said, guys, it's not only about buying, selling, and investing, but it's also about topics about building generational wealth, as well as different hot entrepreneur topics that are going on. So what's been going on? What's been going on with the updates in the real estate market at this time? There's so many headlines that are out there, and it's a lot of negative headlines. I have to be honest, it's a lot of negative headlines. This is what I've been talking about, continuously watching what's going on. What are the economists saying? What is your actual local market doing? So a couple of articles that have come up, and you can see these news lines. Florida house prices are falling in a dozen cities. So it's showing that they're starting to see trends where over a dozen different cities where the prices are dropping. DC region's housing market subdued and uncertain. So that's in other areas outside of my area. DC, they're experiencing, this is where the capital is. So they're experiencing some type of housing crisis there. Things just seem pretty stagnant. Southwest Michigan housing market hit speed bump in April. So a lot of the information came in from the month of April, giving us updates on different markets. The market that we were previously looking at, showing a lot of progress in, was the Michigan market. So the Southwest Michigan market, if you guys do the hand thing, so Southwest, Southwest. So it's kind of over in this area. Got to do a hand thing. So guys, be aware of what's going on in your actual market. I speak to a lot of people that are always asking questions about investing in other areas. It's possible, very possible, but it's also understanding what the market is doing. Don't have high expectations if you cannot continuously view and understand the market that you're getting into. That's why a lot of people start in their backyard. They start there. They have a better understanding of what team members they need to grow, what other things that they need to look out for, what market trends they need to be aware of, what's really going on. So another article said yesterday is never coming back. Soaring inventory. So that has a lot to do, one, overall about the market. What happened in the past. We're probably not going to see those type of numbers anymore. No, maybe not even in my lifetime. You may see something different, some type of other crazy trend, but probably what we saw before, especially during the pandemic time, we're not going to see it again. They're starting to say that the condo inventory is starting to soar a little bit, where it's starting, where a lot of people are placing those condos on the market. They're experiencing where they want to get out of their condos. A lot of those condos, they actually have different community fees. And with those community fees, it seems like those are continuously going up. But values of condos right now are challenged. They're experiencing it in a greater aspect because a lot of condos financing opportunities are limited. Not that they're not there, but it's just they're limited to, say, compared to single family or even what you consider a townhouse. Now you can see it, look at a property and it looks like a townhouse, but they may consider it a condo. So it really depends on the community. But with that being said, they're starting to see increase in inventory. So watching the market, this is also the selling season as well. So you're going to start seeing increases all over. But you're also going to start seeing, not only with those increases, you may even begin to see longer days on market or extended amounts of days of property or inventory on the market. So beware of that when you're taking a look. Widespread softening. Almost every major housing market is seeing softer prices. This is going on across the country. You're seeing it in other markets, the Canadian market. You're looking at the European markets. Everyone around the world is really experiencing some type of situation regarding the real estate market. Specifically, we like to keep things here, talk about things that are going on in the States, just because I have more information in that regards, like to try to narrow things down, but always encouraging people to see what else is going on. But ultimately, when you're looking at the real estate market, see what's happening in your specific market. Just because something else is trending and you see that information that's out there, it doesn't necessarily mean that it's going to impact your market, your local market, in a positive or negative sense. And it goes for both ways, positive and negative. Housing foreclosures are almost back to pre-pandemic 2019 levels. So foreclosures are happening. That is happening. I'm starting to see a lot more short sales that are being placed out there. Typically, if you're doing a short sale, the banks want you to list that property with real estate professional. So I get that information a lot. People are placing those properties out there. Now, how the banks are operating, I have to be honest, for me personally, I have not done much of any short sales at this time, just because there's opportunities if I'm investing. There's opportunities that are not in that situation where I'm not waiting, because typically just to get those to a number that you would want as an investor, the bank has to agree to it. the banks are going off of some of these prices that are out there, and they're not really buying into really dropping the prices of properties. So keep that in mind. But that is what's going on. These are some of the highlights that I'm seeing out in the market. So I'm always telling everyone, be aware of what is actually going on, so you guys know what's up. So I do have a couple updates I want to run by you guys. I'm always chiming in and checking out what's new with you guys, and I want you guys to stay in the know. So by you guys staying in the know, you guys are staying the most up to date. But I wanted to have you guys check out this article. Remember, I made mention yesterday is never coming back, and this was really pertaining to the condo situation that's out there. So with that being said, let's go ahead and chime into this video. I want you guys to check out this report.
A two-bedroom, two-bathroom condo priced at nearly $740,000. It's close to the SkyTrain and in the central area of Surrey. It's been on the market for 45 days. What once would have been a quick sale isn't moving.
People do come draw their offer, obviously lower than the asking price. So we did get a few offers, but again, it doesn't match the seller expectation.
High-rise towers continue to pop up in Surrey, but inside, many of those new units sit empty. Fraser Valley realtor Artie Sharma says this listing is just one example of a growing trend.
Since we have so much inventory, so it's a buyer market, buyer have more choices because they don't have the urge to put the offer right away. So now they have more option to see more condos.
According to the Fraser Valley Real Estate Board, April condo sales in Surrey were down 30% compared to this time last year, while active listings have jumped by more than 40%. A Vancouver real estate market economist says buyer hesitation is fueled by geopolitical tensions.
I think a lot of confidence that buyers have in the market right now, it stems from the economic and geopolitical uncertainty that has been, I would say, present in some form over the last 5 years, but sort of got a boost in a bad way a couple of months ago with the new approach to trade policy.
Add to that what this realtor says is another problem: a lack of investors.
The investor base really disappeared, which is to say the math simply does not work anymore. So you have all these investors that are cash flow negative.
Despite the growing number of unsold condos, prices so far have mostly held steady.
Home prices tend to be what we call downward sticky. Unless sellers, whether it's an individual or it's a developer, really need to sell, we tend to see prices stagnate.
But with more developments in the pipeline, that could change.
And right now, you've got 7 months of inventory in the Fraser Valley. You've got all-time record highs number of units listed for sale. So I think without a doubt, prices are going to continue to push lower.
For now, buyers remain cautious, and the usual spring frenzy of buying is this year a distant memory. Shivani Joshi, CBC News, Surrey.
See, that's what I'm talking about, guys. That is the situation that you're seeing that is going across the nation right now. These different things are impacting the real estate market. You know, as that report mentioned, the tariffs, some of the things that are going on, people are reacting instead of responding right now. So you get a lot of emotional trades or emotional deals that are going on right now where people are just responding to what the economy is doing, you know, with the tariffs, the political climate right now. It's so much going on that this is what's impacting the way people are responding in the market. Unfortunately, politics play a big part in a lot of these things instead of actual trends, but they impact the trends. And now it's, you know, that's what they're going to do. That's what we got to expect moving forward at this point. And that's what a lot of people are paying attention to. So this is just another prime example of how the real estate market is being impacted by the different things that are going on. So as always, I'm always trying to stay on top of this for you guys so that you guys understand what is going on. So another article I wanted to to explore was the pandemic housing boom versus the 2025 market. So basically what the market was back during the pandemic time when we were experiencing so much growth. So, but with this particular article, there's so much going on. And I'm always telling people, you guys have to pay attention to what's going on out there. So in this particular article, it says during the pandemic, housing boom rapidly amid ultra low interest rates. Remember, we had lots of interest rates that were sub 3% stimulus. We were receiving stimulus packages during that time. Then you also had the remote working opportunities. Lots were going on, lots of change that were going on, which increased the demand space and unlocked the WFH, which is basically work from home opportunities. As high earners were able to keep their income from their jobs in the big metro areas, such as New York City, such as LA. Those are markets where they typically pay a lot for the different professionals that are working. But what was happening is those individuals were able to have that same job, work remotely, but actually live elsewhere. And that actually impacted my market that I'm in. I'm in the Tampa Bay market. Other markets would include Austin that were impacted by such changes. And what I always tell people, it was a pivot. When you have the high paying individuals that are living in New York, LA, the West Coast individuals, people in the Northeast area as well, all of them moving to other markets, but they were still able to maintain employment. By them being able to do that, they were having a much higher pay, but also being able to purchase in a much lower market. I say lower by price point wise compared to other markets that they're coming from. And that's what drove up prices in a lot of markets, such as my market, the Tampa Bay market, where you have a lot of individuals that were so willing, homes that were selling for 200, 225, and these are like, say, starter homes. These same homes shot up during the pandemic time, same exact property. They shot up to values close to 400,000. So you right now in the Tampa Bay market, you have a lot of individuals who, if they actually purchased their home prior to the pandemic, they're sitting on six figures in equity. So that's a lot of equity to sit on, which if people are using it the right way, they're going to be able to leverage that, say, for investment properties, building generational wealth. That's why we talk about more than just buying, selling, investing on this platform, because there's opportunities that are out there for people to invest, not only just to have additional monies now, but also help them build generational wealth moving forward. So having a true understanding of that. While many other individuals view active inventory and month supply simply as measures of supply, there's other platforms such as the Resi Club sees them as more as proxies to supply demand equilibrium. So what's been happening is now that people aren't shifting or people are wanting to place their properties on the market, what's happening is the shifting is happening and more inventory is increasing. Whereas before, when people were placing properties on the market, those properties were going right away. But now they're actually sitting on the market for a period of time. And with that being said, now you're having 3 months, 4 months, 5 months, even in some markets, even right here, it said they had over 7 months of supply of real estate. So with that being said, that point is increasing. When that increases, that's going to start changing the equilibrium, the supply and demand equilibrium. Ideally, what happens is more supply that you have, that ideally will decrease the price point. But what's happening is, where's the demand? Demand isn't there as much because what's going on is the interest rates are higher. We don't have that sub 3%. We're still looking at 6 to 7% interest rates. Whenever we have a slight movement, saying downward in increase, or excuse me, downward in the interest rates, you're starting to see people come into the market. But we all know that when you're purchasing home, it takes some time. Just for the transaction to happen, you're going to ideally look at 30 to 45 days. Some can happen a little bit sooner than that, but then it's also taking the time to actually look for the property. Are you going to find what you're looking for? So I know in my market right now, what I'm seeing a lot of, and it makes you curious as in what is really going on in the real estate market is that we're starting to see a lot more inventory increase. And I see inventory for resale, then also inventory for new construction. I see actual communities where they're actually going in, leveling the grounds. Did you see them plotting the land, preparing it for new construction, new communities that are coming? So, what is happening during this time? So, what happens is the builders are being competitive, and builders can be competitive. They are placing incentives that are out there where people can get 30, 40, $50,000 towards closing costs, upgrades, prepaids. All of this can go towards someone that is purchasing a new home. So, compared to resale properties right now that are being handled by a seller, the previous owner isn't going to give up, say, 20, 30, $40,000 in equity just to get the property. So a lot of people are saying, well, I'll just wait. And that's what's happening. So as the inventory continues to stay stagnant, or I say stagnant words, it's staying on the market for a period of time, that inventory level continues to increase. So the amount of inventory that we have available, that number is increasing. We've actually been low on inventory for a period of time. That's always been something I've brought to the surface and discuss with you guys, letting you know that, hey, inventory is slow. So that's what really happened during the pandemic. Pandemic time, the demand was high and the inventory was extra low. So that's why the prices went up so fast. And that's why homes were moving pretty quickly as well, because of that flux of people coming from other markets into cheaper markets. And then the interest rates, the opportunity to borrow money was a lot easier and it was a lot more affordable. So it made a whole lot more sense, whereas people are able to afford a lot more home versus right now where the interest rates between 6 and 7%. So keep that in mind. Over the past few years, home buyers have navigated an increasingly uncertain housing market. Elevated home prices and stubborn mortgage rates have led many Americans to postpone their home ownership plans, hoping for more favorable conditions. This is happening. This is why you're finding that with multi-units apartments, you're seeing luxury apartments being built. You're seeing so many of those being built right now. That's what people are moving into. That's what their preferences are at this time, is to rent. Because if they buy something, it's for a lot of people, it's not affordable right now. But even in certain markets, you have so many multi-units that are being built in the Tampa Bay area. There's so many luxury apartments being built. So these are brand new. Then you also have apartments that are being sold. So these are properties that are already established, already have tenants in place, but now they're selling for much higher prices. So what happens? Is that a continuous trend? Are they paying attention to what the interest rates are doing right now? Does it make it a little bit more affordable for them? People really have to take those investments seriously, and whoever are running the numbers for these investments really have to know their numbers and understand what's going on. There's so much uncertainty in the market right now. So it's understanding what your purchases are going to be and what your investment is going to be moving forward. So while the housing inventory is finally rising, like I said, it's been low over a period of time. And this is information that we're getting from Zillow, one of the CEOs from Zillow. It's an article that I came across. Growing economic uncertainty and constantly fluctuating interest rates. Rates are just going up and down, up and down. It's so unpredictable. As we're in 2025 right now. The housing performance for the second half of the year is still unclear. Many experts predict it will face the same challenges plaguing the market since 2022. So every time I give you guys an update on the market, it seems like every economist is changing their mind from the previous report, or they don't report the next time around. So continue just to pay attention as to what's going on in the market, because it's going to be a trend that we are not going to be able to predict. Another article that I came across was with Yahoo Finance. Housing market faces a lost year due to tariffs, economist says. So this is what's going on. So what a lot of people are seeing and saying is that because of the tariffs, because of the interest rates, that they're looking at 2025 as being a loss. With it being a loss, this is going to be a situation where people are going to really need to know what they're talking about, and then really be careful as in what their next moves are. By them making adjustments or making a decision to purchase homes at this time, what are your future plans? You really have to have an idea of what your future plans are going to be in order to be successful in the market. The tariffs, the interest rates, it's going to impact everybody that's going on out there. So there was something I did want to share with you. There's a guy, there's one of the economists, financial advisors that's out there. I like some of the things that he's doing. I saw some things that were online that he was doing, and Ross Mack. I don't know him personally, but I've seen a couple of articles and so forth about a few things. So I just want to give you guys a little tidbit about some of the things that this gentleman is doing to be successful, helping other people make successful decisions in the market right now. Because, like I said, it is tough. It is tough. So let's see here.
I'm Ross Mack, and this is sponsored by Vanguard. What's up, world? Welcome to Financial Freestyle, your all in finance, and I'm your host, Ross Mack. No matter where you are in life, you can always learn more, and that's why you reached the right spot. Because I'm speaking to some of the most influential people in finance, and today is no different. I'm talking to the Daryl Fairweather, chief economist of Redfin and author of Hate the Game. Daryl, how are you today?
I'm doing great. Thanks for having me.
So this is just to give you guys a little tidbit as in what is going on. So this is Ross Mack. He likes to speak to a lot of different individuals that are all in the financial space. I was following them for a little bit, so I saw something, I think it was on Netflix, a Netflix special or something along those lines. So this individual has been doing some things. It's good to see other people doing great things in the financial space, not only just talking about real estate, but how to protect your investments during this time as well. So like I said, I'm just going to give you guys a little tidbit of what he's been talking about and what this article is particularly about, and just kind of go from there.
No, thanks for being here. Obviously, you have a very extensive resume, but to the world, right? To the people, to the viewers, who is Daryl Fairweather?
I am the chief economist at Redfin. I have a PhD in economics from the University of Chicago, where I specialize in behavioral economics. I've spent a lot of time being an economist in tech, and throughout my career, I've always used what I learned in my PhD in economics to advance it. And I feel like more people could benefit from learning economics if they want to advance their career. So that's what I'm here to talk about.
I love it. Help us understand how you got interested in economics.
Sure. So I originally thought I wanted to be an engineer. I was good at math and physics. And so I applied to MIT. That's where I went for undergrad, thinking I was going to study mechanical engineering. But then on the way to MIT, my dad gave me the book Freakonomics. And that just opened my eyes to what economics is. And it turns out the author, Steve Levitt, went to MIT. So I was like, oh, this is destiny. I need to study economics. I'm in the exact right place to do it for the kind of economics that I want to learn, which is more math heavy. And I pursued it, but I actually got a little bit of heat from my dad and my grandma. My grandma was the first Black woman architect to be licensed in New York, and then she did it again in California, the first to be an architect in the Institute of Architects. And she was really hoping I was going to be an engineer, so she called me up and tried to talk me out of it, and my dad tried to talk me out of it too. They thought that if I pursued economics, I would face more struggles because economics is subjective, whereas math and science that drove up values. There was a limited supply of homes. Builders started building, but it really wasn't enough to meet demand. So when there's more demand than supply, prices go up. And even though interest rates are now higher, they started going up in 2023, and that really hurt demand for housing. The people who bought homes during the pandemic still have those super cheap mortgages, and they don't want to give them up. So now we have a pullback in both supply and demand at the same time. Way fewer home purchases are happening than during the pandemic or even before the pandemic, but values are staying high because when both supply and demand go down at the same time, prices just remain the way they are. Sellers don't want to budge on price, and buyers just end up going to the rental market instead. So we're stuck in this place of just really high values right now.
Well, one, I'm one of those people, right? I was able to get a 3% mortgage. And what's crazy is I want to get a bigger house. And it's like, yeah, let me just chill out
How do you
until
do
these
it?
rates come down, right? And obviously, we got to talk kind of around the way of politics, right? But like, obviously, you have, Trump wanting rates to come down. And so obviously that could bode well for buyers or generally for the housing market in general. But kind of what going on from a geopolitical risk, especially with tariffs, what's your outlook and how can that impact housing?
So what tariffs do is they basically make it harder for our economy to produce stuff. If it's more expensive to import parts to build things, it's harder to build things. And this like can spread throughout the economy in really unexpected ways, like things that are produced together where one good is exported and one good isn't. If one good is more expensive to make, then it impacts the whole entire supply chain. So there's a lot of concerns about supply chains right now and what that's going to do to productivity in the US. But what it's definitely going to do is raise prices. And if prices go up, what the Federal Reserve is going to have to do is keep interest rates high or even increase interest rates, even though that's going to hurt the economy. Pulling money out of it means fewer people can afford to buy things. But it's really necessary because when the economy can't produce as much stuff, if you don't reduce the amount of money in the economy, then it just ends up with higher and higher prices. You get to a situation like hyperinflation, which was what we saw in the 1970s and what we saw in Argentina. And the Fed's just not going to let that happen if they have the power. So
There you go, guys. So if you guys want more about this, go ahead and check out Yahoo Finance. Ross Mack did an interview with the economist Daryl here. So great information. Great information to be aware of. Is not being too nerdy, but just giving you an idea that a lot of this information that's out there is information that we need to look into. I know from the day to day, it's a little bit challenging. All we see is a lot of times is, well, why are the eggs so high right now? And we keep seeing that. Why are they charging so much, for breakfast? When you go to a restaurant now restaurant prices for breakfast are starting to look like the old lunch prices and so forth. So before, you can expect breakfast to be a little bit less than lunch and then lunch being less than dinner. Breakfasts are starting to look like lunch prices these days. So be aware of that, what's going on. But like I said to you guys, definitely appreciate you guys tuning in. We typically do this, like I said, once a month. State of the real estate market with yours truly, Chris Brown. Uh, Guys, if you haven't done so already, be sure to like, subscribe to the YouTube channel. I want to make sure that you guys get that information. And as you guys are taking a look at that, feel free to send me a message. A lot of you guys are sending me messages, having questions in regards to investments. Investment properties are continuously coming up. Investment properties, also conversations in regards to what's going on in the real estate market. Feel free to send that information to me if you guys are following me on social media, Facebook, Instagram. My primary is LinkedIn, definitely on LinkedIn. I get a lot of questions on LinkedIn and also a special request to speak on certain topics through LinkedIn. So I appreciate that. Appreciate you guys sharing the word in regards to this, looking to collaborate with other organizations to see how I can help bring value to what they have and what some of their objectives are in serving the community. So yours truly, once again, everyone, this is Chris Brown, your real estate professional and marketing entrepreneur. State of the real estate market, where we not only talk about buying, selling, investing in real estate, but we also talk about hot entrepreneur topics as well as building generational wealth. Until next time, we'll see you in June. Take care.